Harvard math professor, a Soviet spy, a love for computers, White House. Can you relate to one person who is associated with all these amazing skills? Hi friends, this is Yuvraj Tennyson, and in this video, we'll be covering about the greatest trader of all time, Jim Simmons. And what if I tell you, to top all of these, this person also has a hedge fund that made $100 billion in total during his 30-year career, it averaging to a whopping 66.1 gross profit and nearly 40% annual return in net. You probably think that such a character will be too absurd to exist even in any Hollywood movie, but I can tell you that this person is for real. He's the greatest trader in the entire history of modern finance. Known as the world's smartest billionaire or quant king, Jim Simmons is clearly a class apart on Wall Street. Simmons, a well-regarded mathematician for his Chern-Simons theory, also broke Russian codes during the Cold War. Simmons was one of the pioneers to trade based on quant, data analysis, and pattern recognition. After setting up the hedge fund Renaissance Technologies, Simmons made it his mission to avoid Wall Street brains at all costs, hiring only scientists and mathematicians. From 1994 to 2014, Renaissance Technologies Medallion Fund gave a whopping 71.8% return. You must be wondering why you haven't heard of the Medallion Fund. This is probably because Simmons closed the fund to all outsiders except employees of the company in 2005. Simmons is today worth $24.6 billion, making him one of the most successful and greatest traders of all time. In this video, we'll go through his incredible life story and most importantly, how he achieved all of this amazing return. Born in 1938 to a middle-class American Jewish family in Brooklyn, Massachusetts, Jim Simmons loved math from the moment he understood what it was. Like rare people with an unusual talent for numbers, he began to show his interest to learn and solve complex problems at an early age of 3. One day his parents found him dividing numbers by 2 all the way from 1024 downwards. Without knowing it, the 3-year-old started solving a classic mathematical problem. One of the problems the Greek philosopher Zeno had addressed in his famous paradox. If you always have to travel half the remaining distance before reaching a destination, no matter how small, you cannot reach the final destination. For a 3-year-old kid, this was an astonishing achievement which caught the eye of everyone. After finishing high school, he was encouraged to go into medicine by the family doctor. They thought it was a good job for a bright young Jewish boy. Of course, Jim had other ideas too. He chose to go to MIT and study math after struggling initially and failing a few tests. He finally blossomed as he loved to solve complex problems and formulas. For him, mathematics was universal mystery to be solved. One night, he saw his professors in a deep discussion about a problem at midnight. He decided this is the kind of life he wanted. It was a world full of cigarettes, coffee, and mathematics, and nothing else. After all the glittering academic achievements as a professor, Simmons was tired of teaching. His life began to follow a particular pattern and he was terminally bored. He desperately needed another amazing challenge in his life to utilize his mathematical skills. He started cracking Soviet spy codes. In 1964, the opportunity has arrived. Simmons immediately jumped on it. He was hired by a national intelligence group called IDA, helping to fight the Cold War. IDA stands for Institute of Defense Analysis, an elite research organization funded by the government that hired mathematicians who can help to crack the Soviet spy codes. At the time, the IDA was struggling and they had not cracked Soviet codes for over a decade. Because of the lack of success, they had decided to employ people like Simmons with no code cracking experience. However, having genius brain power with a lot of fresh ideas. It was there that Simmons learned how to create mathematical models and interpret patterns and seemingly meaningless data. It was here that Simmons created an ultra-fast code which broke the algorithm. Shortly after Simmons' innovation, intelligence experts in the CIA discovered that a coded message with an incorrect setting had been sent by the Soviets. Simmons and his colleagues leapt on this glitch and used Simmons' code-breaking model to successfully exploit the enemy's internal messaging system. This led to Simmons becoming a rock star at the IDA and in the code-breaking community. However, being the intelligent person he is, this success was not enough for Jim Simmons. He wanted more mathematical challenges and more cryptic codes to unlock. Finally, he entered the financial markets, the biggest puzzle in the world. While trying to crack codes at the IDA, Simon used to spare time to research and ponder the world of global finance. Eager to earn more money, he began thinking about ways to crack the stock market and try to test some of the best methods using his talents rather than opting for the same old tested methods which consisted of corporate news and company earnings. Simmons began a new approach to the stock market from a whole new perspective. He looked at the stock market the same way he looked at mathematics. He developed a model that looked at the stocks rather than looking at the outside context. He suggested that the market had 8 underlying states. It was a system that ignored why the market entered certain states but simply allowed the traders to make bets according to the state of the market. This approach was very unique and revolutionary. Simmons was like a trailblazer back in his time, eventually until today. Simmons was one of the first pioneers who tried to apply the predictive theory to the investment world. Nowadays, it widely used in artificial intelligence and machine learning. Let's talk about his first hedge fund. In 1968, Jim Simmons was 30 years when he was asked to leave the IDA. He started teaching again. However, this time at Stony Brook University in New York, and Wall Street wasn't far away from there. After 10 years of working in the Stony University, he left and started his first hedge fund, Monometrics. He wanted to find the hidden patterns in the market using mathematics. His first move was to invite an old friend from the IDA, where he started his coding career, Leonard Baum, and his Baum-Welch algorithm was the cornerstone of Jim Simmons' early success in the hedge fund world. The basic idea of Baum-Welch algorithm was to analyze a chain of past data and estimate the probabilities of each possible outcomes and calculated predictions. It would go on to be enormously important for the future. It used especially in today's speech recognition technology and Google search engine. They figured out that a predictive model like this would be very useful for monitoring the moves in the financial markets. This was way back in 1979, before the days of digitized trading. So to measure data, they had to stick to lots of paper graphs and charts over the walls and the tiny office in Long Island where they began everything. They started using the algorithm in the currency markets and started making a lot of money. One day, when they were on a beach, when the algorithm signaled that the British pound would go up, they ran into that hotel room in shorts and bought pounds even though they had no idea of the British fundamentals or policies. As magical as it was, the British pound rose skywards. All they did was follow the algorithm signals without any fundamental knowledge, and magically, within a couple of years, the hedge fund grew by tens of millions of dollars. Can you imagine? Second hedge fund and big losses. After seeing this success, he started gathering a team around him and boom, he set up a new hedge fund with some new algorithms named Limroy. They worked on the algorithms and started getting into all sectors of the market. They were trading in commodity that time when gold prices skyrocketed to $865 an ounce. However, this time the algorithm didn't quickly sell enough and gold crashed to $500 an ounce. They began to lose more and more. There were several losses like this when the fund was losing millions every day. Soon they were in a brink of collapse. They were going through a lot of questions. Then the ultimate renaissance was born. Fortunately, Simmons was able to find new investors among his smart friends to back his Renaissance fund. Although he had money to buy him some time, Simmons needed to develop a far more accurate algorithm to read market movements. It was early 1980s and computers were still in the development stage. While other fund managers and investors were old-fashioned with their old methods for their prediction of the financial markets, Simmons decided to give computers a shot, and he believed computers could handle data much better than a human being who is driven by emotions. He understood that computers have higher accuracy, and zero emotions as compared to human beings. He renamed monometrics to Renaissance technologies. This new hedge fund has since changed modern finance forever. He invested heavily on more data and feeding the computers directly with reports of currency prices going back to before World War II for consistent patterns that might apply to the present. However, present markets was increasingly volatile. Though there were great resemblances, it was very difficult to reason patterns that would be relevant to the present from this historical data. Therefore, the goal was to monitor the present as swiftly as possible. They bought lots of expensive computers that calculated data at high speeds. This provided live market prices that none of the other hedge funds had at that time. That gave them a definite edge over others in the market. By the time they had approved their algorithm, more refined computers became available, improving their capacity to monitor new data. After this point, Simmons and X enjoyed working together more and more. So the two started a new hedge fund under Renaissance Technologies. It was called the Medallion Fund. By leveraging Simmons and AX ideas, the Medallion became Renaissance's most profitable portfolio. Soon, Robert Mercer, a computer scientist, joined as he was the last missing piece to Renaissance's massive growth. He was a key engineer for computer giant IBM. His talent for technology helped identify flaws and glitches in the algorithm system. Averaging at 60%, there was no single losing year in the 90s for the fund. They were on the freeway to create history. However, due to Mercer's political affiliations, the partnership fell apart until recently. Today, Jim Simmons is certainly something like a modern day equivalent of a powerful finance dynasty. His achievements, when everything adds up, are truly astonishing. First of all, he is the most successful in the history of wealthiest traders in the financial world. No one even comes close to his profits from those investing legends like George Soros, Steve Cohen, and Warren Buffett. Yes, the great Warren Buffett. Jim Simmons' hedge fund made a whopping $105 billion since 1988 to 2018, with some mind-blowing 66% before fees and 39% after fees. His profits at algorithm approach creates a revolution impacting not only the financial industry but also other industries. For example, there is no professional sports in the world nowadays that doesn't rely on data and quantitative analysis. Let it be at the industrial or political level. Everybody uses algorithms to get their skills better. He later on established the Simmons Foundation for Education, and he also funded Stony Brook University. From the boy that liked to solve math equations, Jim Simmons is definitely